All right, everyone, I'm going to show you the key fundamentals of an index annuity, the ins and outs and how it works, and why so many Americans are using it on a portion of their assets. Okay, so we have three different options for your money. Keep it high level, very simple. Most people do fixed, they do variable, saving money in the bank. Maybe they have a bond portfolio. Also, they do want some upside potentials, and then we look at variable, great upside, but at the same time, as we all know, the stock market can come down. Then there's this third option, and this is one that we do specialize in. It's called the index crediting option, where somebody gets to both worlds. They're guaranteed to not lose money, and at the same time, their account gets credited based on an index. Okay, so what exactly is an index annuity? Let's see it in relation to other types of popular investments that are out there. As you can see, we have stocks, we have index funds, mutual funds, bonds. And if somebody doesn't want to take on risk, they typically say, you know what, let me save money in cash, money market, take advantage of high interest rates with a CD account. But people forget or they're not understanding, wait a minute, there's this strategy called an index annuity, which is right in that sweet spot where clients are guaranteed to not lose money and at the same time their account gets credited. So this is where index annuity falls in relation to other popular investments that are out there for pre-retirees and retirees. But how exactly does an index annuity work? And let's break down a key fundamental concept. So for today, we're going to keep it high level. But let's say someone has a lump sum of money, come from a retirement account or a savings account. Point being is someone has a lump sum of money. Because of high interest rates, the investment companies are offering clients what's called an introductory bonus of 10 to 13%, depending on the carrier. Now, be cautious of the bonus because some carriers give you a high bonus, but they also cap your rate of return. But some clients do like the bonus. But in this example, let's use the bonus. Let's see someone has a $300,000 portfolio. From day one, they get their bonus. Their account is now at $330,000 for opening a new account. Okay, then the question comes is, well, how exactly does this saving account grow? Well, it's going to grow based on the performance of one of the major indices in the stock market. Most people pick the S&P 500, but at the same time, when the market does go down, the carrier does guarantee a floor of 0%. So you do not lose money when the stock market goes down. Okay, pretty attractive. So let's play this over 4 years. First year market makes 7%, the account gets credited 7. Market drops 12%, don't lose any money. You have that guarantee floor of 0%. Market goes up 4%, account gets credited 4. More importantly, market drops 20%, panic selling, people are getting scared. In this strategy, guarantee floor of 0%. So you can see how quite popular it is in today's environment. But a lot of people say, okay, well, what's the catch? I wouldn't say there's a catch, but you definitely have to sign an agreement with the company. Their agreement could be 5 years, 7 years, or 10 years. Most clients do 10 years. We are looking at a long-term retirement focus. And also, most companies do waive the management fee while you're under the agreement. Okay, and if you do need access to the money, some carriers let you access 5%, 10% after the first year. Some do have liquidity features where you can access more. But over 10 years, let's see how this looks. So we moved over $300,000. The account grew to $563,000 with essentially zero risk. And we assumed a 5.5% rate of return. Okay, these are really structured to get you about 5 to 7% on your money. Some years you get more, some years you get less. Every company is different, but we look at it as a bond alternative, not a stock market alternative. So these are the basics on how an index annuity really works. Okay, if you do have additional questions, let me know. But let me show you a quick snapshot of an illustration so that you can start seeing some numbers on how exactly it works. Okay, so this is with a company that we do business with, a A-rated financial company. There's a lot of great companies that offer index annuities. Make sure that you find one that fits best for what you're looking for. But for today, we're going to look at Global Atlantic. And this client, Mr. John Wick, male 57, he's out of the state of California. Now, most annuities are approved in all 50 states, but we do work with you. We do make sure that it is approved in your home state. And this client wants to do $300,000 in a qualified account, typically a IRA, 401k for there be a qualified account according to the IRS. And let's see what this looks like over 20 years. Okay, so what I love about this is notice you don't see any negative numbers. That's going to be the guaranteed floor. And the years that the market does perform, there's going to be a positive crediting strategy, which is pretty amazing. Okay. And then you could let it ride. It's up to you, but you get the general concept of how index annuity works. Another question we get a lot is, Mark, what happens if I do pass away prematurely? There is a death benefit to the account. So as you can see, if somebody does pass away prematurely, it's going to go to their beneficiaries. So the death benefit is going to equal the contract value. Another thing we do that work with clients is understanding this surrender value. For a company to guarantee you against market losses, give you a bonus, some crediting, no management fees, you definitely have to work with the management company. If you cancel the agreement early, you're not going to be able to get all your money back. That's what's called the surrender value, as you can see here. That's what I want to cover today. Quick fundamentals of an index annuity. Thanks for watching. If you found this helpful, hit that subscribe button today. And if you're ready to take the next steps, feel free to schedule a discovery meeting with COR Financial Partners. Until next time, take care and keep building smart.